I am here to talk to you about a very interesting topic. In fact, last year around this time, we talked about the same topic just because it is just that time of year. People think about acquiring properties. People think about what kind of tax benefit would that bring me. So the big word related to property is the cost segregation, right? Have you ever heard of people telling you, oh yeah, you should do cost segregation? What exactly that means? That actually just means you take some quick deduction ideas, and by segregating your property that you bought to different segments. So that way it will qualify for different deductions, will speed up your deduction, which means will pay less taxes if you have a lot of taxable income. Okay, we want to talk about understand cost segregation, such a big word. You know, English is my second language. And to be honest, every big words I learned, and I really felt the stress over it, because if it is a word that you don't use and you have not heard, people goes, oh yeah, do cost segregation. And you will be thinking, what are you talking about? No secret. And I'm going to break it down in such an easy to understand concept, and never be afraid of the big word, cost segregation. So what? It's a piece of cake. And you would understand that in the next 20 minutes. Really take responsibility on your own. And I always say that for tax world, the best person who can handle your taxes is yourself. Even though, of course, Community CPA here is doing your taxes, we charge you for a fee, and we have income for the company, but we would not tell you that the best person to do your taxes is somebody else, is you. But sometimes you have better things to do. Sometimes as a business owner, you're good with that, and you let other professionals handle your other work. That is absolutely the best thing to do. But again, if you really learn it yourself, and you will know how to guide other professionals to help you. And even if you don't do tax return, you should still be on the webinar to listen to what's new. Because when you speak the buzzword, and your professional folks will know, oh, right, yes, we can think that for you. You know, not everybody all the time knows exactly what you're thinking, right? So take responsibility, learn as much as you can. So that's the advice right here. All right. About cost segregation, who cares about cost segregation? I'll tell you, if you are a business owner who owns property, cost segregation should be a buzzword for you. And if you bought a building or did a renovation or about to build a brand new building, cost segregation should be your buzzword. All right. And you should be the one that understand what behind cost segregation already before you acquire property, before you build your building, okay? Of course, if you don't owe any taxes and you have $940 million losses under your belt, like our President Trump, then you don't need cost segregation because you don't pay taxes, right? But if you do flip and sell, like you buy a rundown building, then you turn around, sell it, you don't need cost segregation because that is not in the nature of taking advantage of what cost segregation would give you. So now, and the cost segregation benefit is accelerate your depreciation deductions, defer your federal and state income taxes. Of course, if we defer your income taxes and you don't pay it, you increase your cash flow, right? So it's an obvious good reason. And of course, if you are in the state that you don't pay income tax, then it will just defer your federal tax liability. Now, cost segregation, what type of property would qualify? An office building, apartment building, restaurant, hotels, grocery stores, recreational facility centers, anything that commercially used. anything that you do business with. Okay, so these are the cost segregation subject. Like you have a building, you bought a building for commercial use, and you bought a building, you bought an apartment building, you're renting. These are cost segregation subject. All right, so you may wonder, okay, and now I understand. So what are the component inside of the cost segregation? What are the component of the property? So you have a land, building structure, interior, exterior component. These are three big components. If you just, for any building, you know, on earth, you can have the land, that's part of the price you paid for, right? And the building structure, the foundation, the structure, and 2x4s, all of these are structure related. Interior and exterior component, which on average 20 to 40% of interior and exterior component can be written off much quicker than the building structure. I'll give you examples later, but let's just kind of understand. I want you to hear me. You don't even need to look at my slides. You just hear me. There are three big components. Number one is land. Number two is building structure. Number three is exterior, interior components, right? So now let's talk about these interior, exterior components. What are they? What are they? They are flooring, the wood floor, carpet, boards, those are flooring, appliance, refrigerator, and ventilation system, right? Heating system, and lighting, landscaping, sidewalks, parking lots, and more. If you have anything that built in, those components are interior, exterior components. Okay, anytime after you bought the building, you are doing remodeling and construction, those are another sector you can speed up the depreciation as well. So here, the cost segregation, and also is when you purchase, remodeling, and the construction of property, that is when you call up cost segregation time to do it. Okay, now let's see the rules related to that. And one thing I want you to see is the cost segregation on residential building. Okay, without cost segregation, if you just have a residential building, the depreciation of the building is 27.5 years. Of course, the land is not depreciable. So you want to know when you buy it, you want to know the portion of the land, the portion of the building. For example, you bought a house. You're going to rent this house out. Okay, it's not your residential home. It is the home that you bought and you're going to rent it out. And so you bought the house for $350,000. $275,000 is the building value. $75,000 is the land value. All right. So this $75,000 land value is something that you cannot depreciate. We just leave it out. So let's say we put this rental property in place on January the 1st, 2021, you'll be able to take the depreciation of the building over 27.5 years. That means I take the 275,000 divided by 27.5 years. So that would give me 10K depreciation. So what happens if we consider cost segregation? So this is an example that we are not considering cost segregation, right? We bought a property we're gonna rent starting from January the 1st, 2021, and I bought it for $350. The land I don't depreciate. I only depreciate $275,000 over 27.5 years because it's a residential building. So that year's amount is different than the commercial. Commercial is 39, and the residential building is 27.5. So 27.5 divided by 275,000, that gave us what? 10,000 deduction, right? 10,000 deduction, what does that mean? You ask me, Ying, what does the 10,000 do? Okay, let's say you made a $10,000 W-2 income. And this $10,000 depreciation deduction will offset your $10,000 W-2 income. So your income, your taxable income will be zero, right? So that this 10,000 I'm talking about is really offsetting your income. Now, let's look at what if we do cost segregation for this particular purchase. Okay, so of course, with cost segregation, we're going to consider the value of the building structure, the value of interior, exterior component. We're also going to identify the asset life. For example, the exterior component, including the windows and the roof. Let's say I bought this residential building so old, the window and the roof and the valued at, say, $30,000, but they need to be replaced in a year time. So how do you depreciate that? It's 30,000 will be written off right away because it's only have 1 year life. That's what I mean by identifying the asset life. All right. So now look at our number. Remember, without cost segregation, we can deduct 10,000. So let's look at it with cost segregation on residential. And so same example, right? So the land is 75,000, no deductible, not deductible. So we don't count anything on that. The building structure is 150,000 divided by 27.5 years because structure is 27.5 years. So we can deduct 5K. Sidewalk, fences, sewers, 45,000. It's a 15 years asset life. We evaluated that. So it's 3K. Appliances, 50,000, 5 years asset value, asset life. So it's 10K. Fixtures, those kitchen cabinets, fixtures on the wall, right? 30,000, 7 years life. So 4K. But if you add them up, they're 22K, they're not 10K. So you suddenly had 12K more deduction. This is what we're talking about, cost segregation. Of course, you're going to ask me, oh, Ying, I don't know how to figure out the asset life. And how do you know the asset life? Of course, you would know. And you would know if you consult professionals. Their companies does nothing but doing cost segregations. You know, if you go on internet, look for cost segregation companies, they're all over the place. So they will charge you 7,000, 8,000, but will come up with all of these detailed deductions for you so you can speed up your depreciation. All right. CPA firms also can do cost segregation work. So cost segregation can also be done by your engineer who are building your building because they already knew. If they put in the heating system, they will tell you that this is a 15 years life. So, you know, people who are familiar with the replacement of your components knows the asset life. So that's where you got those years. Now, let's look at commercial building. Earlier, we talked about residential, you're renting the property, right? But what about you bought a plaza? What about you bought a recreational center? So that is a commercial building. Commercial building is depreciated over 39 years, not 27.5 anymore, folks, 39. But the land is the same, no depreciation. All right. So without cost segregation, you can see, let's use this example. 480K total, you bought a building. 390K is building value, 90K is the land. And you put that in place to work on January the 1st, 2021. And you'll be able to take depreciation of that building over 39 years without doing cost segregation. So you will just take 390,000 divided by 39. So folks, what you got? 10,000 deduction. Deduct from your business income, right? So that is the 10,000 expense that you can deduct. But what if we did cost segregation? Now, of course, you want to evaluate the building structure and evaluate interior, exterior components. Then evaluate the asset life. Those are the things you need to do in order cost segregation comes in. So now look at this. Now example, This property is 480,000. 390 is the building value. 90K is the land value. And you put in as a commercial property on January the 1st, 2021. The land, 90,000, no depreciation. And then your building structure is 200. Based on the valuation, the building structure is 200,000. You divide that by 39 years. So they'll give you 5K, right? And the sidewalk, fences, sewers, 60K, 15 years, 4K deduction. And appliances, 14K deduction because the total value was 70,000 and it's a 5-year life. And so it's 14K deduction. And what about fixture? 60K thousand and 7 years. So you got a 9,000 deduction. Your total deduction to income is what? 22K. So going back to earlier slides, folks, do you remember when you don't use cost segregation, you had how much? 10,000. Now with cost segregation, how much is that? 22,000. 22,000 is your expense now because you used cost segregation, so that will reduce your taxable income. Wouldn't that put more tax saving in your pocket? As a result, you got more cash flow. Am I right? So this is the understanding of cost segregation. I really hope that you gained that understanding just by listening to me rambles for this last 20 minutes. But what I want you to get into your mind is when you acquire a building, as long as it's for business purpose, whether it's residential or commercial, and using cost segregation is a tool to have you deduct more expenses than just putting the building with 39 years or 27.5 years to depreciate. And putting in more deduction is to save taxes, which means that you probably would pay more taxes if you don't save. So for people who doesn't have a need to pay taxes because they got so many millions lost from past life, of course you don't need to do cost segregation, because when you do cost segregation, you also deducting all these value, then later on you don't have that much to deduct. So, your building depreciate a lot. When you sell it, you have this recapture gain, right? So the deduction of depreciation is not a way to completely not pay taxes. It's a deferring on the tax that you need to pay. It is a game of deferring. It is not an absolute solution for you to save taxes. But saving taxes today, it should be a principle of everybody's tax planning. And the tax people are different than financial planner. The financial planner folks will tell you that to save a Starbucks coffee today, you're going to be a millionaire 20 years later. And that is because they have this interest rate they're imagining. So they're calculating the value. They give you $1 million after $3.50 saving every day. But the tax people like myself, we are very focused on today because we can't predict which president going to be our president. We also cannot predict how the city, county, state, and the federal government change their rules on taxes, right? So without that crystal ball, and we only focus on today. If I can save your taxes for $5 today, I am not attracted by saving your taxes tomorrow for $10 because I don't know tomorrow is going to be there. And so for that reason, if you can save taxes today, do it, because that's the right way to do, to be a responsible citizen, to guard your taxes and filing it right. IRS don't need tips from you, and they just need you to do the right thing. So cost segregation is a tax tool for many businesses that are taking advantage of. Now, and here is our email and the phone number. We do open 6 days a week, folks. And our firm is not like all the other CPA firm. We open 6 days a week, and Monday to Saturday, And here is our number, and our 515-288-3188 number is actually dials to all our branches. So you would for sure get a real person coming on board to talk to you. And of course, you can email Catherine at communitycpa.com to let her know that what is your most interested topic. We always want to meet your asking and making our webinar a real tax strategy, tax saving places for you to visit. And we want us to be useful for you. And this is our goal for today and for tomorrow. All right, I'll see you again on Saturday, folks, and have a great week.